That was one heck of a bear market bounce. In today's video, we're going to talk about where to focus. You're watching the Stock Market Brief Show. My name is Michael Silva. Hit that thumbs up if you haven't done so already. It is greatly appreciated. Let's go ahead and get into today's show. All right, so yes, what a wild day in the markets. Once again, volatility still remains to be very high. It's a difficult environment to be a part of. What I want to call out here, what were the laggards today? Well, it was defensive sectors. Does this mean that they're down and out? Should we count these out? Well, we're going to dive into those. What was leading the way? XLC, which has been the biggest laggard of all, right? We're getting a bounce. Energy was all over the place today. And then technology and consumer discretionary up there too as well. Those are some big sectors which obviously helped the market out tremendously, being deeply in the red and then all of a sudden coming all the way back. So is this bear market rally? Is it a bear market rally? Is it the start of a new up leg? Well, we'll dive into it. But first and foremost, should we discount or should we throw these defensive names out? In my opinion, no. And the reason why is simply this. They are still trending up. So we take a look at utilities. It's at about its lower risk range. If you don't know what that is, I have a link in the description below on how to predict moves on a weekly basis in various sectors. I track 31 products on my Discord and I give that out every week. But as you can see, we have a higher low, and we are still at a higher low, and it is still above an upsloping 200-day moving average. So as it stands right now, we are in a correction, but it is still delivering alpha comparably to some of these other sectors. And then you have a higher high, and a higher high. So right now we're doing a pullback, but I still think it's something to watch. But it's not just that one. We have XLV2. This is really just sideways for quite some time, and you can look at this risk range. Just look how wide that risk range is this week. But take a look at the hammer candle, take a look at the volume that came in. You can see it held as resistance, then we broke out, and now we're coming back to back test it. So we'll see here if it comes down to the lower risk range or if it wants to continue pinging around this channel. But this is another sector that I don't believe is down and out at this particular point in time. One to keep an eye on. And then consumer staples too. This was a big break on big volume. We tagged that 50-day moving average. But once again, if we just zoom out of the chart, we have a low, a higher low, a higher low. And then even if it comes down to 73-ish right here, the trend would still be bullish because we still have higher highs and higher lows. So do not discount that yet. Just be patient in this environment. As volatility is high, when VIX is above 30, 35, 40, everything gets hit. And that's what we're seeing right now. So I'm positioned quite defensively, but I'm playing tactical bounces. And what I'm seeing right now in the markets looks like we're setting up for a tactical bounce. But before I get into that, I want to show you the safety ratios, right? We're looking at gold, utilities, consumer staples, bonds, defensive names, and XLV, which is healthcare, all relative to the S&P 500. You can see gold stalling out. You know, utilities is pointing down. Consumer staples is kind of curling itself over, but it's still above the 50-day. Bonds have just been getting murdered. More on that later. Defensive stocks pointing down, but still above that 50-day. And then XLV, which is healthcare, is still above on a relative basis, but it's just going sideways above that 50-period moving average. So yeah, they're taking a little bit of a back seat. Now, what I find interesting about both gold today and also TLT, gold on day one hit its lower risk range already. I'm still a believer that gold is still in an uptrend at this particular point in time. So that to me looks like an adding. I have a position that has been building out. This to me looks like an opportunity to add. I still think that there's going to be more volatility, but being that we're at the lower risk range already, we're above those 200-day moving averages. It's just an asset class that I want to have a little bit of exposure to in this current time. And if you take a look at TLT, I haven't added to my TLT position because when we're on this bounce, I was kind of saying that like I wouldn't be surprised to see this roll back over. You can look at stuff like SHY. There's a couple other ones, BN. I forget the ticker. I'm gonna have to bring it back up. But there's other ways that you can get exposure. But as it stands right now on TLT, if you are interested, we did hit that lower risk range, and we'll see here if that, because 68% of the time, for those that don't know, it ends up closing within this risk range, and we're just right there at the lower bound range on day one here of this trading week. Now, what I do find interesting is the FANG stocks, right? Those have been getting brutally just dismantled this year. However, what I want to call out from a relative basis, we're looking at, Facebook, Apple, Nvidia, Google, Microsoft, Amazon, and Tesla over here. Okay, just want to call out that we do have some stuff pointing up. So Facebook, it's getting back above that 50-day line, but still remember, It's in bearish context, okay? Apple, it's above that 50-day, but it's sideways. Okay, we have NVIDIA starting to curl itself back up on a relative basis, still in bearish context, all right? Google starting to point back up. Microsoft looks a little bit stronger here from a relative basis, starting to point back up, but really it's just going sideways. Amazon got destroyed. Tesla also, it's not actually looking too bad here, but it's still below that 50-day, but it is just trending sideways. So on a relative basis, what I'm seeing in the short term, I'm seeing these start to turn up. Okay, so let's add another kind of element to this, and that is looking at growth to value ratio. And if we look at the growth to value ratio, what I find interesting here is if you apply a 10-period rate of change, we talked about this, and this is the relative strength line. So for those that don't know, it means that, hey, when this goes up, it means growth is outperforming value, and we're using the proxy of IWF, which is iShares Russell 1000 growth, and IWD, which is iShares Russell's 1000 value. Okay, and if this line goes up, that means growth is outperforming value. When it goes down, it means value is outperforming growth. And it's been, value the stronger performer pretty much this year. What I'll call out here, you're going to see some red vertical lines going across my screen. Those red vertical lines are all labeling the times where the rate at which this relative strength line crosses from beneath zero from an overextended area, which is the -5 reading, to a positive number. Okay, so as you'll see, overextended area crossed up through, negative area crossed up through, negative area crossed up through, negative area crossed up through. Why am I saying this? Well, we were at a negative area and we're close to crossing up through. So what did the Qs do during this time? Because I'm looking at growth, right? You can use other proxies. You can use IWF if you prefer that. But when that happened, well, we saw a big rally. When that happened, we saw a big rally. When that happened, we saw a bear market rally and then it got reverted. When we saw it happen, we saw that continuation of that bear market rally and then it got reverted. So right here, what I want to call out is if we start getting above there, that does set the stage for a potential rally here, but just be mindful of the context that the market is still in, right? We still have a high, a lower high, a lower high, a low, a lower low, a lower low. So it does look like it has the potential to start firing off. And that, once again, bear market rallies, they suck in a lot of people and then they become very confident. But if you're playing tactically, understand that there are overextended things to the downside. So playing from the long side makes sense here, right? And you saw that today. Really, the market was selling off and it was just like, no way I'm going to be shorting into this. And then I started looking at wedges that were forming and then all of a sudden took the entire day. But then all of a sudden it just started firing off, which just smells like a bear market rally once again. But also, if you take a look at the BPCOMPQ, this is the NASDAQ Bullish Percent Index. Look at this. We're back to overextended. I want to preface this that breakdowns do happen in overextended areas. Okay, so breakdowns do occur. I don't know why I point down there. I meant to point right here. That was the COVID crash. So breakdowns do occur in these overextended areas. However, what we have been playing is overextensions to the upside, start taking profits. When it's way down here, start looking for long positions. And that's kind of what my kind of view on the market is right now. Another thing to look at is the New York Stock Exchange. If we just look at NYA, which is a good broad picture of the market, I want you to focus on the trend, which is lower highs, lower lows, and look at how it's just been volatile, chopping people up like crazy. Okay, but what I also want to call out here is this low, and this low. What do you notice there? All I want to call out is these bottoming tails. The bottoming tails here on these lower lows. So as you can see, when we saw this big move to the downside, we saw this huge bottoming tail, and then we started to rally. It took a little bit of time. Right here, boom, we moved up, we came back down, and we started to rally. So right here is very similar type tail to those, where it does look like it could set the stage for a rally. But just be mindful, once again, of the context. Another kind of, not the greatest look here is you got to understand that the advanced decline line also has just been breaking down. So we're not getting the support from the advanced decline line, which is, incredibly important. Let's take a look at the SPY. The SPY, big volume day, big break, right? We hit a new low, breaking below this prior low, but it did form a hammer candle. We started ripping back up higher. What's tomorrow going to look like? It could be just, it could be a pretty just inside trading day. Maybe try to put in another high. I don't think that we're going to take out 405, but we can't be surprised if that happens because really just this rally day right here, remember we're like, oh, boom, but we didn't get any follow through and it reverted and closed below all of these lows. All right, so we have a hammer candle, we have some nice volume, RSI is still below 50, we have the MACD still pointing straight down, but if we start getting above the high of this daily candle, that may set the stage for a little bit more of a rally. So yeah, look at the risk range. We're just below 430 and just below 495. So the risk range or the expected move significantly down from the prior week, and we have a much bigger low than the prior week too as well. So we're talking a huge range of volatility, which means to me a lot of things can happen this week, right? We have the Fed meeting, we have some economic data coming out. You got to be prepared for pretty much just everything. You got to be very careful, okay? If we take a look at the SPY on the 15-minute time frame, this is that wedge that I was watching pretty much the entire day. There's a positive divergence building, and then we started breaking up to the upside. Now, where do I think we might run into resistance? This volume shelf point of contact, power point of control, right? 420, that would be an area of resistance. And keep in mind, we're still below that declining 5-day moving average. So if we come back up here, doodle around, once again, hey, that might set the stage for a bigger rally. The upper risk range moves right into this resistance, That's just below that 430 level. So, hey, if we get up there and you're long the market, I mean, I played the breakout, but I played it in the Qs. I'll move my stop loss to break even, right? And I'm going to see if I can get a runner for once, but if I don't, it is what it is. And we'll see here if we can shoot up a little bit higher, okay? But as it stands right now, you just got to be tactical and you got to take some profits when you're given that opportunity. So is this bear market, is it going to bounce potentially more? Well, I want to hop over to the VIX. The VIX on the 30-minute time frame, I wanted to just call out, we did fill that gap, and we said, hey, if it fills that gap, you start looking for long positions, and well, we had that negative divergence, and we start breaking down towards the end of the day. Okay, so it's getting held up a little bit. Clearly, it's an overall in an uptrend, but this break can potentially head us lower down to, 30 to maybe below 30, perhaps. But just keep in mind, I mean, we still have, low, higher low, and it's still a higher low at this particular point in time, okay? And we still have one gap above us north of 45, which is one that I'm really keeping a close eye on. But so VIX is backing down here slightly. If we take a look at the Qs, right, Qs is up 1.67% thanks to that end of day trading session there. The relative strength line, is starting to curl itself back up a little bit here, right? So it could be potentially bottoming out where we see that little bit of a bounce. The histogram starting to curl up here a little bit. It was a bullish piercing type pattern here where it kind of gapped down and then it closed halfway through the candle with some good volume. So it's setting the stage for a potential rally, right? But it's, you just, if you want to take the chance, you can take the chance, but it's still, once again, it's just the context of everything, right? Even if it were to rally up to 340, it's still in a downtrend. All right, so just be mindful of that. All right, this is a bear market. It is what it is right now. If you take a look at the Qs on the 15-minute time frame, there's that wedge, positive divergence started blasting off, still below a declining 5-day moving average. We want to see it flatten out, and then we want to start to see it going up. Context, still bearish, but if you play tactically, you can catch some of these big rallies. 327, just 50 is just above that, is that risk range, which matches up with this area of resistance and this area of resistance. So if we do start getting price up to here and you're long, that would be definitely a good area to start potentially pulling some profits off the table and then start positioning yourself or looking for other opportunities. One thing that could kind of really just break things apart even further is the TNX, the 10-year yield, right? That today it hit 3%, so it hit 3 as a high 30.02, which is 3%. So this thing just met its full measured move of this inverse head and shoulders, and the rate at which this move just tore things apart. So we'll see here if it's going to take a little bit of a breather, but still, as it stands right now, there's just no slowing down. Let's hop into Bitcoin. We're going to first look at the relative strength ratio, the Saylor to Schiff tool, which is Bitcoin over gold on a 4-week rate of change. Somewhat of a good note here. It's starting to turn up, right? The context of the whole chart and everything, it's still bearish in this time frame, but hey, it's starting to point back up. I need the week to close above the zero line, right? Above the zero line, and that's initiates or starts the process of a buy signal. And then I look at the prior week, and it has to get above the high of the prior week. As it stands right now, we're still kind of in that bear flag, still on the sell signal, but on a good note, it is starting to turn up. And let's go look at the daily time frames because there's also something interesting developing there. All right, we are over here at the ftx.us website. This is the site that I use. When people ask me what I use to trade crypto, I do use ftx.us. You can trade with up to 85% lower fees than the competitors. And on top of all of that, they support this show. They support my channel. Let's take a look at the daily time frame for Bitcoin. So what is interesting that's going on here? Well, first and foremost, let me bring up the drawing tool. Excuse me. All right, so if we bring up the drawing tool, and I want to call out, this is actually now, so we do have a bear flag, right? So it's bear flag broke down. However, what I am starting to notice take shape here is a shorter term wedge. Okay, so a shorter term falling wedge is taking place, which just tells me one of two things. It doesn't mean, okay, it's bullish, all of a sudden we're going to start going higher, right? The context is still bearish. Okay, it is still bearish, but, big but. This is contracting, right? So the markets move between expansion and contraction. So this is telling me here that we're probably going to be seeing a bigger move here in the very near future. I can't tell you if that's going to be to the upside. I can't tell you if that's going to be the downside. What I can tell you is that we have the Saylor to Schiff tool. It's turning up, but it hasn't gave us a buy signal. Okay, we have the MACD. It's starting to curl up, and we have a bullish type pattern. This is all taking place in bearish context, so you need to take it with a grain of salt, okay? But it is something for the bulls to potentially start to keep an eye on. This last trading day candle that just formed right here, it is not the greatest looking. It's kind of like a doji, which means indecision, right? It's undecided. Do we want to take out the low and start breaking down lower? And is that when the expansion is going to take place? It may be, but it also may not be. If we start taking out the high, that sets the stage for us to go retest that 42,000, which is that 50-day moving average, and trying to see if we can get back above, this high over here, which was 43,000. Okay, so that's what I'm seeing from a bullish perspective and both a bearish perspective too in the price of Bitcoin. Now let's really quickly hop over to Ethereum, because that's also another one that I want to show you. So Ethereum is also kind of in this bear flag structure, but if I just, break it down like this, you can also see something very similar where we have that area of resistance, and it's not quite flagging, but you can see that it is kind of in a way wedging here in the price action too. So the bullish crossover, it may take place, right? We have the buy signal. We're still below that 50-day moving average. We do have a low, a higher low, but it's something that potentially can produce a bounce here. So I'm starting to see things start to line up. And if this is the case, right, we talked about growth being a bounce, a bear market rally bounce, that could very well take Bitcoin up higher and Ethereum up higher too with it. These are just typically higher beta trades, but the correlation is very tight. All right, so I hope that helps out. All right, everybody, that's all I got for you on today's episode. We went over some of those risk ranges on both the SPY, the Qs, right? It looks like we're setting the stage for a bear market bounce, but remember, volatility, it's still high, and that takes the knees out from defensive names. It takes the knees out from everything. So you're just going to see more volatility here, but hopefully I gave you some ideas of kind of where to keep your eye and what to focus on going into the next trading session. See you later.